Hello, everybody. We're back with another episode of Pure Perspectives. I'm Clark Alexander. This is Gary Pierce. He's in Texas. I'm in California. How you doing, Gary?
I don't know, but we'll give it away.
I gotta get
Me
a
being
hat.
in Texas and all.
I don't know. What
Yeah,
should I
I
wear?
know.
Like a bucket hat
Like a real cowboy hat.
that
Yeah.
says I pay a lot of tax.
Yeah, that's exactly what you do.
It's February 12th, everybody. So just a reminder,
Yep.
2 days from now, all the fellas out there, make sure you got your stuff in order.
Yeah. Yeah. Get your Valentine's stuff.
Get your Valentine's. All right. So what do we got happening this week? We got some data. We got jobs that have come out, and I haven't done a detailed review, but they looked pretty strong. And then we have CPI tomorrow. Is that correct?
Unemployment dropped from 4.4 to 4.3, which I don't think too many folks had it on the bingo cards, considering the amount of layoffs that we saw, call it, end of January. But I'm wondering if that'll kind of creep back up a little bit. The interesting thing on the jobs report was that as it relates to mortgages, our rates kind of stayed flat. And usually that would shoot rates up with a decline in employment like we saw. So I think that's encouraging.
Yeah. I mean, certainly the market reacted, and then don't really have a read on what we're going to see tomorrow from CPI. It's very tough to predict given which tariffs are on, which are off, what the market has done price wise. So we'll see what that comes back with. And then
Lock today.
Yeah, lock today. Yeah.
Yeah.
Good point.
I would never especially floating through a CPI report is always a scary proposition.
Yeah.
Because even if the report comes out, bad and inflation's hot, it could take a few weeks, for that to settle back down and get reports back. So if the deal's good today, take it today, right? Don't wait. Don't gamble, because it could, mean a couple $1,000s, to the bad.
Yeah.
So
and I will say
that would be my 2 cents.
For people that are out there either getting ready to jump in or have an application in and they're monitoring rate, we're not seeing big swings right now. There's not major movement. So if you're good with the rate you have today, lock it in. As Gary said, with this data coming out, the market will react, and it could take some time for it to cool off.
Yeah.
So we got that going on. I would say generally rates are kind of the best we've seen in a long time.
Yeah.
I guess if you're out there kind of shopping around trying to figure out, hey, what opportunities exist in this current market that I need to take advantage of, what would you highlight, Gary?
So I think one of the interesting deals we've been looking at is the 15-year note. There hasn't been enough spread in those to really make the difference unless you're just really focused on your financial situation to be at a 15-year loan. But, if you in the last 4 or 5 years, have bought a place and you're in the mid sixes to higher, the opportunity is probably there if you're interested. Now, again, you're coming in with some equity. You want to be at about a 60% or lower loan to value. Surprisingly enough, that payment is going to be pretty close to what you're paying today.
Yep.
But you're going to trim, call it 5 years off of that. I'm sorry, more than that, 10 years off your mortgage. So if you've already paid 5, take another 10 off of that with the, dropping it down to a 15-year, and your payment's going to stay within kind of a range of a couple $100, most likely on the deals that I've been looking at. But again, that's a 60% loan to value or lower for that consumer. I think that's an interesting place to look at. Again, we haven't really been looking at 15 years because there just hasn't been a good enough spread it's just putting too much pressure on the payment. Especially when you combine taxes and insurance that have, generally speaking, across the board have been higher as of late, recent years, call it 3 to 5 years. But yeah, I think it's, as you're looking at your mortgage plan and you're in that 6.5 to 7 range, give one of your loan officers a call and just kind of run the numbers. But I think you might be surprised that the 15-year could be in play and save, quite a few years off your mortgage. And then again, that's a long term. That's somebody that knows they're not selling their house in 3 years or 5 years, right? That doesn't make a ton of sense. But if you're going to be in it for the long haul, it's a good opportunity.
If you're going to be in it for the long haul and you're okay with your payment now, switching to a 15-year, the amount you're going to save on interest payments over the life of the loan is a big number.
Thousands,
big number,
tens of thousands.
Going to be very appealing.
Mm-hmm.
It's I mean, the rates are in for 15 years are in great spots right now. So I would highly
Yeah.
recommend, if it's even an option, get it priced out with one of our loan officers. Let's look at real numbers on what your deal might look like, because it could change things
Absolutely.
dramatically for you, your entire financial situation, that is.
Yep.
Good stuff, Gary. Anything else that's catching your eye and opportunities in the market right now?
No, I mean, we are seeing, as you mentioned earlier, rates are low. They're probably kind of
Yep.
what they were the first of the year. So call it on average about 6.125. So we were, the last 2 weeks probably around that 6.25 number, and so that we have seen the rates get better. So the opportunity is there. Really got to watch what's going to happen tomorrow with CPI. If that number comes in hot, that number is going to bounce pretty hard, I would imagine.
Yep.
And you're going to be looking back towards the 6.25 kind of range. And then the trickle effect of that is how much the market will continue to kind of hammer at that, and the treasury, the 10-year continue to inch up. But I think right now it's good shape. So hopefully, the market wasn't very volatile yesterday after the headline on the unemployment number dropping, which typically would be bad for mortgage rates. So let's see. We'll see what tomorrow brings, and next week we'll have some more news.
Awesome. All right, to wrap up, if you're in the market, take a look at a 15-year CPI data coming out tomorrow. Not sure where we're going to land. Could have an impact on rates. 3, get in touch with your loan officers, have them run numbers. Let's see what makes most sense, because that 15-year option could be very interesting for you. Gary, as always, thanks for the wisdom. Appreciate it. We'll be back soon with another market update. We'll give an update on what the CPI data came out like, and what how it's impacting rates. We'll have more for you early next week. Thanks for tuning in, everybody. A reminder, give us a like, give us a subscribe, leave us a comment. We'd be happy to get in touch with you and help you out. Gary, you stay frosty down there, okay?
We're doing it. Adios.
All right. Thanks, everybody. Have a great day.